Are you looking to invest your money in a safe and stable asset? Look no further than gold. With its long history of value retention and inflation protection, gold has proven to be a smart investment choice for beginners and experts alike. In this video, we'll show you how investing in gold can help you diversify your portfolio and reduce risk. Whether you're just starting out or looking to add a new asset class to your existing investments, gold is an excellent choice. But that's not all. Investing in gold also offers potential for significant returns, particularly during times of economic uncertainty. By taking advantage of the fluctuations in gold prices, you could earn substantial profits on your investment. And the best part? Investing in gold is easy and accessible, with options for every budget and level of experience. With just a little bit of knowledge and some smart strategies, anyone can invest in gold and reap the benefits. So if you're ready to take your investing to the next level, join us as we explore the world of gold investment. From the basics to advanced strategies, we'll help you become a gold investing pro in no time. One of the benefits of investing in gold is its historical significance and enduring value. Gold has been used by humans for thousands of years, and it has held its value over time. In times of economic uncertainty or political instability, gold has often been a safe haven asset for investors seeking to protect their wealth. There are several ways to invest in gold, including physical gold, gold ETFs, and gold mining stocks. Physical gold can be purchased in the form of coins or bars, but it can be expensive to store and insure. Gold ETFs are a simpler and more affordable way to invest in gold, as they trade on stock exchanges and provide exposure to the price of gold. Gold mining stocks are the stocks of companies that mine gold or other precious metals, and they can offer a way to gain exposure to the gold market without owning physical gold. However, gold investing also carries risks that investors should be aware of. Gold prices can be volatile, and investors who are unprepared for this volatility may suffer significant losses. The cost of gold investments can also be high, particularly when it comes to the storage and insurance of physical gold. In addition, since gold does not produce any income, investors cannot rely on dividends or interest payments to generate returns. Investors should also be aware of the operational and financial risks associated with gold mining stocks. Geopolitical events, labor disputes, and natural disasters can all have an impact on the volatility of gold mining stocks. It is important to conduct thorough research and due diligence before investing in these types of securities. Another important factor to consider when investing in gold is the tax implications. Depending on the type of investment and the investor's country of residence, taxes on gold investments can vary. When investments are sold for a profit, capital gains taxes are due. Investors should speak with a tax professional to understand the tax implications of investing in gold in their country of residence. In summary, gold can be a valuable asset to own as part of a diversified investment portfolio. Its low correlation to other assets, safe haven status, and finite supply make it an attractive option for many investors. However, gold investing also carries risks, and investors should be aware of the potential downsides before making any investment decisions. By conducting thorough research and due diligence, investors can make informed decisions about whether or not to include gold in their investment portfolios. That's it for our video on investing in gold. We hope you've gained some valuable insights into the benefits of adding gold to your investment portfolio. Now it's time to take action. If you're ready to start investing in gold, do your research and find a reputable gold dealer or broker. Be sure to explore different investment options, such as physical gold, gold exchange-traded funds, or gold mining stocks. Remember, investing in gold is a long-term game. Be patient and stay informed about the market trends and economic indicators that can affect the price of gold. And always remember to diversify your investments to reduce risk. Thank you for watching, and don't forget to like, share, and subscribe to our channel for more investment tips and insights. Happy investing!